In this video I'm going to pick one of my older strategies that makes use of the slope or steepness of a line to determine the trade or not. It has some unbelievable results, but with the knowledge we have today, also some major caveats. So stay tuned and see you after the intro. As said, in this video I will take one of my older trading bot strategies to test to see how it performs in comparison with all the earlier tested strategies. It is a lagging strategy that was built for spot trading and only for longs, since the Freqtrade bot did not have the capability to go short at that time. The idea behind this strategy is that I only enter a trade when a moving average goes upward. In these cases, a moving average has a certain positive slope or steepness. The slope of a line is a non-angular representation of the angle between the line and a horizontal line, such as the x-axis. The higher the slope number here, the more parabolic the moving averages go. To make use of an example, here I have two simple graphs. One where the slope between 2 points on the moving average is slow, and one where the moving average is going parabolic, and therefore also where the slope is much bigger. Now the idea here is to find assets where the moving averages rises sharply and also indicating demand on the asset. What I show here is somewhat of an oversimplification, because my strategy uses more parameters to decide trades or not. But this slope idea is the main baseline. Now, to calculate the slope of a line, you have to divide the rise of a point by the run of a point. That means that you have to divide the difference between the lower and higher point on the y-axis, which is the rise, with the difference between the 2 points on the x-axis, which is the run. So the rise is y2 minus y1 and the run is x2 minus x1. And to use the example graph over here, the rise is the difference on the y-axis between point B and point A, and the run is the difference on the x-axis between point B and point A. So if the rise is 4 and the run is 6, then the slope is 4 divided by 6, which is 0.666. Now if the slope is 0, then that's a flat line, because y has no inclination. And when the slope is negative, then the moving average goes down. It's that simple actually. So let's open the code of this strategy and see how it's programmed. Let's start with the generic settings. The ROI of this strategy is 0.6, which means that the strategy takes profit at 60% gains. The stop loss is set to 0.9, which is 90% loss. This setting looks a little bit too high, but I have programmed a trailing stop loss in the exit indicators, so I expect never to make use of this setting. Then the time frame is set to the 4-hour time frame, and we will see later if that is really the best setting for this strategy. Now, what's important here to notice is that I also make use of a trailing stop loss, which is based on an offset. When the position has a 28% gain, which is determined by the positive offset parameter, the offset gets triggered. Then, when there is a 3% loss in the price where the offset was triggered on, the bot will sell the position. And in these cases, there would be a theoretical 25% gain on the trade. Then we have the indicator section over here. And as you can see, there are more indicators than just a moving average and slope calculation. The first indicator I use here is an RSI, which is set to a short 7 periods. Then I configured a bunch of moving averages that each have their own function. The first one is the market moving average. That helps me determine the major bull and bear markets, or major bull and bear movements. You can use this as a switch if you only want to trade above the 200 MA. And beware, that's the 200 EMA of the specific time frame. Then there are a slow and fast moving average. The slopes I use are determined from these MAs. And then there is an entry MA, which I will explain later. In this section I calculate the slopes, and I will only use the slow MA as an example here. The rise I explained earlier is determined by the SI2 and X2 and SI1 and X1 points. SI2 X2 is the average price of the previous day, which can be seen as point B from the earlier example. And the SI1 X1 is the average price of 11 days ago, and also comparable with point A. Then the slope is finally calculated here on this line. And the same goes for the Fy and Fx points, but this time for the fast moving average. And you can see S is for slow and F is for fast. Now the more experienced programmers will immediately say that these calculations can be made in only one line without making the data frame unnecessarily big. And also making use of variables on the X and Y points can be more logical. But this is an older strategy, as I've mentioned, and for me this worked, although it's indeed more quick and dirty looking this way. Let's see things in action by making use of a Jupyter notebook. First I import the necessary functions and create a data frame from the downloaded BTC USDT dataset. And with the data frame head function you can see the first 5 entries of the data frame. Okay, now let's add the indicators, and I'll start with the RSI. And then I will add all the moving averages. Now that we have all the necessary indicators, it's time to calculate the slope of the fast and slow MA, since we are using these as the main source for our buy signal. And as you can see here, I calculate the slope first by determining the price of the moving average on the y-axis point at a specific row with both the data frame SI1 function over here, and the x-axis points are just the amount of rows these points were set to. And here with the data frame SI and data frame SX, I calculate the differences between the points, and then I finally calculate the slope here by using the data frame SI shared by the data frame SX here. By the way, these numbers are arbitrary and you can set these any way you like, but for me these proved to give the best results at that time. And as you can see on this data frame over here, I do nothing fancy. Just pay attention to the slow slope and fast slope columns. When they are positive, then the moving averages is rising, and when the number is negative, it is falling. And these other slope related columns are here for references and checks. Okay, now back to my strategy file. On this next line there is something special. Here I determine a special stop loss based on candle information. This stop loss can also act like a trailing stop loss, because what I do is simply select the last 10 candles each time there is a new data frame entry. And then the lowest low is determined by the min function, and this value will be used as the minimum value the close price of the current candle should cross and then trigger a sell signal. So if the close price closes below this value, then there will be selling. And this shift function puts that value in the current row of the data frame, so that it can be used for comparison with the current close price. And therefore it acts also like the threshold for closing the position. Now if I put this in the data frame, then you will see what I mean. I create a new column that determines the lowest low over the rolling 10 previous candles, and then shift that value to the current row cell. You can see what I mean if I show you only the date, close, low and last lowest column. So here in this notebook cell, you can see that the lowest value on row 1835 was found over the last 10 values, and then entered into the lowest low of row 1836. So if the close price would get below that value, then there will be an exit signal and the bot would close the position. I hope you understand what I mean. Now let's continue with the code. Here is a plotting section that can be used to plot these moving averages and RSI on the chart. I was doing a lot of plotting back then, but slowly starting to move over to Jupyter Notebooks for that. Okay, now let's continue with the actual rules of the strategy. And you can see over here that I have a bunch of code that determines the trade signal. To begin with the commented out options, these were the options that I tested to see if I got better results, but they did not. However, I left them in the code for future reference. Maybe it can help you to also try and find out some alternative options for your entry signals. The real signals come from the following parameters. First of all, the market should be bullish, which is determined by the 200 MA on the used time frame. The fast and slow MA slope should both be positive to enter a position. And the close price should be above the highest candle of 11 days ago. Optionally, I had a 3-day average of 11 days ago here, but this option was fine for me. So that explains also the 3-day MA earlier. And then here's some confirmation settings. The RSI should be above 55 as a momentum. And finally, the fast MA should be above the slow MA. Now, for the exit position, here are two indicators that tell me that I should leave the position. And these are the fast MA is below the slow MA, or the current candle close gets below the lowest low over the last 10 candles. And I explained that earlier in the data frame option. So let's backtest this strategy according to my proven methodology and see how this will perform at the different time frames. And as you can see here on this overview of the initial backtest results, it shows that the 4-hour time frames has a whopping 8,970%. And to be honest, I was really surprised by that. I think this is mainly caused by the trailing stop loss set, which had 357 wins with an average profit of about 30%. Another small portion of the profit was due to the ROI setting, and the main cause of loss was the exit signal. But that last one was to be expected, because the whole purpose of the exit when price closes below the lowest low of the last 10 candles was to exit the trade quickly if market turned out bearish. So 60% of the trades were quick losses and 40% were trend riding opportunities. Since the trading bot can optimize ROI, stop loss and trailing stop loss settings by default, we can also check what the results could be with optimized parameters. So let's optimize these settings only to see what the potential is of this strategy. But before I continue, I first want to thank you for watching my videos. Please consider subscribing to my channel and get updated on new content. And give a thumbs up and a comment if you like this video. Now let's continue with the end results after hyper-optimization. So after hyper-opting the ROI, stop loss and trailing stop loss settings, I got some unbelievable results, and I honestly cannot imagine that this is true. And yes, I have to admit that I could have optimized all the parameter settings as well, but I did not want it to be too complex and curve fitted. But the settings for this strategy has absolutely amazing profits. Now, as I said, the settings for the RSI is pretty common, although 7 is a little bit quick, I think. But the SMAs of 21, 50 and 200 should be familiar to everybody that has some experience in trading. And the setting to calculate slope and last lowest candle are educated guesses, but I'm happy with these settings. But after hyper-opting only ROI, stop loss and trailing stop loss with these settings, it's just amazing results. And honestly, I simply could not believe them. But if you look more closely at the coins that benefit the most of these new settings, then you will see that only altcoins had major pumps in 2021. And if you look at the number one coin that has the most benefits of these new settings, namely Luna, then you must realize that trading is indeed a risky business, and you should take profits whenever you can, and not marry your crypto in any way. Because we all know what happened in 2022 with this coin. And to compare this even more with the original settings, Bitcoin had a nice profit with the original ones. But with these newer settings above, Bitcoin trading did not benefit at all and proved even to be a loser. But this is all with the benefit of hindsight, and you have to remember that these backtests are done with a dataset that ended in December 2021. So when you started to let your bots trade with this strategy at the beginning of 2022, then you would not know all that stuff that would happen last year. And if I downloaded and tested this strategy with the dataset of today, I still would not know what would happen tomorrow, next week or next year with these coins. So you always have to take into account the risks that come with trading. Anyway, let's pretend 2022 did not happen and see at which position this strategy would end the total strategy league with these findings. And it looks like that we have a new number 2 in the League of Strategies. And again, I did not expect to see this strategy enter this high when I started these backtests. It certainly has its advantage to take profits quickly with a trading stop loss if you think the market is turning against you, locking in these gains. You can see that with a win rate of over 70%. If it only had a lower drawdown, then it could possibly have the number 1 spot in this league. But again, the indicators I use are fairly simple and straightforward in comparison with the NFIX. And the rules for entering and exiting a trade can be easily programmed into bot code, which takes the human factor out of trading. And then provide these results, it's pretty amazing. I wonder if anybody can verify these results when they backtest this strategy on their own bot. Now, to end this video with a final word of advice. Again, this strategy has great potential, but you should realize that every coin can dump to zero. I'm not promising anything, and you should always do your own research before putting your hard-earned money into crypto and on exchanges. Keep that in mind. Anyway, I hope you have gained some knowledge from this video, and I will see you in the next one. Goodbye!